Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, we've got charts and data that no politician wants you to see. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob. So let us have it. What are they hiding?
Well, what no politician wants to hear is that the number one respondent to what's wrong with the country and their biggest worry is inflation. Let me throw this chart up at you. Okay, and the second one is being able to afford a home. So we have a problem here. The way politicians like to work is like they like to spend money, Phil, right, to bribe you into voting for them. Well, right now, when they spend money to bribe you into voting for them, is costing. People are actually seeing the cost of that to them. It's okay if if your political enemies have to pay the freight. It's a whole other ball of wax when everybody has to pay for the corruption and the bribery that you're witnessing here. And people say there was another survey, we talked about this before, that people would rather be in a recession than have inflation. And probably the big reason for that is that recessions are typically more targeted. Not everybody suffers in a recession, but everybody suffers in inflation, and there's no getting around it. And we're at the point now where I would say we're at peak government value in the eyes of voters, and it only gets worse from here. We were joking yesterday, you remember, or this morning, everything blends together, how corrupt some places are, but Argentina took people 100 years, but finally they said what the politicians are providing to me pales in comparison to the cost of me allowing them to give me stuff. And they threw them all out, and they did a hard 180. And I think many countries are going to start going down that path. Unfortunately for America, I think we're only about halfway down that train. People have never really experienced true inflation before. And the reason why I say that, in the 1970s, we had inflation, Phil, but everybody and their brother had a cola. So all it did was basically a reset of prices, but people relatively, maybe some short-term pain here and there and a slight recession in 81 and 82. But this time around, this inflation is going to be brutal because we're going to have half the population that can't escape it. They're on fixed incomes, okay? And then you have the other people are gig economy people, right? That are going to be easily replaced by either AI or outsourcing, or they're going to be subject to regulations and they're going to lose their gig jobs. So it's going to be pretty awful. And I think politicians hate to see this because they can't fix it. The only way you fix inflation is by taking things away from people, and that's not their mindset. The second chart I want to show you is because the unemployment report came out today, and it was a big miss, and it was only, I think, 117 or 170,000 jobs created. And everybody said, well, we're still positively creating jobs. Well, I'm here to tell you we're not positively creating jobs. It's a plug. And you just have to look here to see the difference between the employment and the entrepreneur, which is basically the birth-death model. They say people starting their jobs, right? And it's a big gap here. It's nearly 120,000 jobs. So basically, we really didn't have any new employment. And what we do know is that in the months prior, we build up these revisions, Phil, and they're just going to drop a bomb on us and revise down like 1 million jobs. Basically it's called just big pooper scooper. Get it out of the way, call it a one-off. But that's what they've been doing. They've been basically faking us with jobs for months and months and months. They couldn't fake it much this month anymore, and they still are trying to do a plug on the birth-death model. This third chart I want to throw back to you because this is telling us that the borrowed time, we have to return our watches back to the pawn shop because I think we're going to get some fury in the stock market based on inflation and unemployment going the wrong way.
Yeah, if you look at this chart, this is a line in maroon is your U.S. private jobs openings percentage rate. I'm not sure if that's year over year or month over month, but it's a decline in the openings on a percentage rate basis. And if you look at the gray line, it's the U.S. equities / government bonds and their returns. What that means is we should be trading below the 2022 stock market lows, because that's where this maroon line is job openings percentage rate is actually lower than we were back then. And the stock market generally follows along, and the returns on the stock market generally follows along with that. So we've got this major bearish divergence on this line. You're hard pressed. You have to go way back to find something similar. But if you notice, before 2022, we had a similar divergence where the maroon line broke away and started falling away sharply from the gray line. And then the gray line caught down rather sharply. So that's what we're risking here. Now, again, we can still go up for a few more months into summertime, but at some point, I think we're going to catch down to this in a really sharp move. So we have to kind of watch how we come out of May and going into June. But if we don't get any lift from that transition into June and things are looking shaky, we may not have a lift. Maybe we saw the highs for the year. That could be the case as well. Basically, what you need to know is that the chances of us going down sharply as we progress through the year are very high, because this is normally the job openings rate is a leading indicator. And that's really like the one thing that we've been talking about as the last shoe to drop is unemployment rate climbing and jobless claims rate climbing.
Yeah, and Phil, I pulled up the chart while you were talking, and the SPY low of 2022 is at 350.
Mm-hmm.
So that's a pretty big dump, from 500. You're talking 15 on 50, right? So look at 25-30%. Decline in the stock market, which is not out of the woods at all, based on the economic data. And I think it's coming fast, Phil. When these jobs start to fall, they start to fall, and people are going to start panicking, because I was sharing with you something before we got on. Job seekers are coming back into the market, and they're finding out their jobs are 30 to 50% less pay than they were before. And this is the thing that I've been talking about, is that they're going to solve the unemployment problem by making you poor. And I think that's what's happening here, and we're getting this sneaky deflation that's coming into the mix. So watch oil closely. It's going to sniff it out, and watch TLT closely, because they're going to be the canaries in the coal mine for this, and also Bitcoin. So yeah, I'm still in the camp, Phil. We're still positive vol stop, on the long-term charts. We still have some room to actually fall a little bit before, we try to mount the new highs here. But if it breaks that vol stop, we're talking around 4,800 on ES. Then I think we can make a quick move down to those lows of 2022, or at least 2023, or around 4,000 on ES. So guys, the easy money's gone here now. Now it's really going to be trader's paradise. I think the investors are going to start getting really cranky here, because they're not going to see their portfolios moving at all, over the next 6 to 9 months, in my view.
Yep. Guys, let us know what you think in the comments below. Thanks for watching. Please hit like and subscribe, and hit that notification bell if you can. That really helps us out. Also, check out our specials over at tradegenius.co. If you guys want help navigating these markets, you can check out packages over there, and you can get into the room with us and get feedback from other traders and Bob and myself. So thanks, guys. Thank you, Bob. We'll see you guys on the next video. Take care.
Trade Genius.